Okay, let's start off with the next presentation where we have the pleasure of welcoming Henrik Ekelund, who is the CEO of BTS. My name is Simon Granat and I'm covering IT and tech stocks at ABG. And I will be moderating this presentation. But with that said, now let's get started. Henrik, please go ahead.
Good morning, everyone, and thank you for calling in. It's my pleasure. I'm the founder and CEO of BTS. We've been listed on the stock market since 2001, and we have many happy shareholders who've been with us during a time of growing share price and a growing dividend. Obviously, we've been hit the last couple of months, everyone else, and I wanted to tell you today a bit about our long-term story, why we've grown so well, why our profits and share price have gone up so much, and also a little bit what the last events with Corona has meant for us and how we're doing that. So if you look at our vision is to be the global leader in strategy execution. We have many years of rapid growth behind us and interest in strategy execution. What does this, in short, have a new strategy? The challenge starts. How do we implement this through our organization? That's where we specialize. And if you look at slide 3, on the market drivers, we are primarily working with the 2,000 largest companies in the world. And those companies are today exposed to a lot of change. They need to change, and that is really what creates the market opportunity for us. You see, BTS, even though we are only about revenue and 900 people, we're spread all across the world. About half of us comes from the US, about 25% from Europe, and 25% from the rest of the world. To tell you a bit more specifically about what we do, let's look at slide 5. I'll tell you about a customer case very briefly. So this is a previously state-owned European gas distribution company. And they discovered they had a problem, a big problem. The customers really disliked them. And they were thinking, how can we make this happen? How can we improve what customers think? And they found that's not only about marketing. This was about the whole organization functioned and thought and worked. And they hired us, and we developed all 2,700 leaders in the company on how to be a more customer-friendly organization in everything. And as you can see, the net promoter score a lot when we were with them. So this is one example of an assignment over several years. If we look at slide 6, this is another case. So as a new CEO comes into a leading global industrial company, and we have worked with the CEO before, he notes that this has fantastic products, manufacturing, but they don't understand profitability in this company. It's not a profit-oriented company. So he hires us. We train every leader, every manager on what is profitability. And this year-long assignment led to a significant improvement in their profit. So this is, again, what we do at BTS. For the biggest companies in the world, they need to make happen, they hire us. And we're very effective to work with thousands of leaders and many, many thousand employees to create this change. And in this particular space, we're a specialist and we are a leader. So this is a little bit about what we do. Let's talk about the BTS stock as an investment on slide 7. And on slide 8, why has BTS been such a great investment on the stock market? Such a growth case for many, many years. We've been growing revenues, profits, share price, and dividend. And I think reasons, and I'll go through all 3 of them. It is our strong position, big market, is the track record, is the aggressive financial goals we have forward. So slide number one, please. We are targeting a big $100 billion US, over 300 billion krona. And one of the reasons here is that BTS, we're not a Swedish or a Nordic company. We are all over the world. We can work with American companies, companies in Australia, which we do. So that is a big market, and the market is growing, which that's 4 to 5% a year. It is very fragmented. There are many small consultancies, many small training companies. And why is that good for us? Well, because it's easier. Fragmented market. And today, even we only have 1% or less than 1%. So again, a lot of room for us to grow. And on slide 10, our track record. If you look 3 years, our average growth is 16% per year, and our average growth, EBITDA, is 28%. And if you go back 5 years, or 10 years, or 15 years, you would see similar numbers. Year after year, we grow our revenue and we grow our profit faster. And we know that, and our margins are also very stable, always in 10% plus range. And we know that a lot of investors value not only our growth case, but the fact that we have such stable and long track in our share price. And if you look at slide 11, you can see that we're trying to do even better. We're actually aiming to grow 20% here. So faster than historically, and primarily by increasing the acquisitions we do. We have primarily in the past been growing organically, and now we are acquiring a bit more and trying to get to 20%. We're also have as a goal to get to 15% margin. If I go back to 2016, we were at 10.6%, and then we grew it in 2017, in 2018, and 2019. Every year we've grown our margin, and in 2019 it was 13.2%. So not only are we growing, grow faster, also working and delivering higher margins. So looking at why are we growing? Why are we growing? And on slide 12, as I mentioned, it is a global growing fragmented market. Secondly, we have a strong competitive position that we have built, which is using technology, where we are using the latest research in how adults learn and change is leading. It is much better than what competitors offer. Thirdly, we are investing in organic growth. The margins that we achieve of 13% in 20 after we put a lot of innovation solutions, we put money into markets and to our talent. And fourthly, we are investing in acquisitions. Now, looking at slide 13, we are not a pure consulting company where we are totally dependent on the people working and limit our margins. We have a lot of scalable platforms and solutions. We have license revenue supporting this, and we have a content line and so on. So our business model is much more scalable than a typical consultancy, which is why we have been able to show numbers that we look here. 14, you can see our acquisition strategy. We are acquiring companies to have a service offering, to get into new markets, and to expand markets. And if the acquisitions we've made over the last 5 years, mostly medium-sized companies, smaller companies, where you pay as much and get more value for money, with some very successful acquisitions. Slide 50, just to know a little bit more, we able to improve our margin year after year. It's really about being more efficient in our operations. It is about economies of scale, and it is about the license revenue, so the payment for IP. And we aim to continue this until we get to the 15% mark. Now, of course, a lot has happened in Q1. And if you look at slide 17 on the Q1 summary, it's quite a dramatic situation. In mid-February, we reported our 14th consecutive record quarter in terms of profit growth. And we entered 2020 with a record book, big book, very, very strong. And then suddenly, towards the end of February, spread across the world. And that, of course, has impacted us a lot. About 60 to 70% of our revenues comes from physical delivery, physical meetings with 25 people or 100 people or 500 people. And that revenue has basically disappeared. So that's a big challenge, obviously. And that came to us very strongly in March. And growing in March, as you can see, we did with equal percent. Now, we had a challenge then in Q1. What would do? And that's so much revenue would go away immediately. Cut our costs. Should we dismiss half of our people? No, we don't want to do. We have a very valuable, great base, and we want to keep that. We have competitors cutting down, and obviously we will be in a much stronger position than our competitors if we don't cut down. So we decided to tackle this crisis not through cost cutting. Obviously, we've been saving and we've been frugal with the shareholders' money immediately since we saw the corona crisis come in. But our prime is to find new revenue. So we're trying to substitute revenue that's disappeared, physical deliveries have disappeared, with virtually facilitated sessions, such as this one, or digital solutions. So we started immediately March 1st with a sales campaign out to the more customers on digital and virtual. And we made a big upskilling internally in the organization. And I'm happy to report that since March 1st until reported a couple of weeks ago, we had already sold 350 million in new revenue, virtual and digital. So substitute the physical that we had lost. So if we look a little bit at the numbers on slide 18, you can see revenue and profit for. Normally, we always give plus numbers. This is a very unusual slide for me to show. Always plus on the top line, bottom line when I present. But this Corona quarter Q1, we've lost 4% of the revenue, 59% of the EBITDA. If you look at slide 19, per region, you can see Europe has done the best. They had the best revenue structure going into Q1. And other markets, where we include China and also Italy, Spain, Southern Europe, they were really hit much more during Q1 by the corona. Then look at slide 20 quickly. You can see that we have a history of growing profit per quarter. But then again, obviously in Q1, going down. Same picture on slide 21. You can see it's a very, very clear growing of revenue and profit, but then a dip in Q1. Slide 22, financial position. One of the things part of our action in the Corona time, to our cash position. And as you can see, we have, at the end of Q1, 429 million compared to 259 million a year ago. And we have also very, very little debt. So we're very cash strong, which we think is an advantage, first of all, in uncertain times, obviously. But even we see other competitors in difficult times, and we foresee that acquisition opportunities will come up during the second half and also possibly the next year. Now let me talk about slide 3. You know, we have invested for many years in digital and virtual. Both, we've built a unit with about 100 people, and we acquired also 2 companies. We were in a strong position when the crisis hit to make this move from physical to digital and virtual. And what's very interesting here is that this is not only going to be short term, customers will change their habits longer term. And for us, it's meant that we've been able to make a leap much faster. So this crisis, why it's very difficult, it also has a big opportunity for us in moving us faster to digital and virtual. Finally, slide 24. How we come out stronger. We have a very clear plan saying that our focus is really how we come out stronger from this crisis so that through, let's say it's in 2021, we can get to revenues and profits that are much higher than before. What to do is the physical deliveries will come back. Big pent-up demand for that. But when that comes back, we will have a bigger virtual and digital business. Secondly, in these times, we're winning new customers and deepening relationship with existing customers. So we'll have a better customer base. And we also are using this crisis to upgrade our organization, our talent base. So the key is to come out stronger and be able to deliver more revenues and more profit before the crisis. And with that, I've spent my 20 minutes and I'm looking forward to any questions.
For the very good presentation of BTS Group. Initially, I'd like to stay on the COVID-19 subject that, of course, is on a lot of on many people's mind. Obviously, the pandemic is having a large effect on various sectors, but is it possible to you to give us some flavor for the development in different sectors and also how much of your sales that stems from various sectors?
That's a very good question. Basically, some industries are dead. They buy nothing. And some industries buy a bit, but less. Then there are some industries that are going to buy a lot. And we have refocused our sales resources to the third category. So, some of the sectors that are doing well are tech, pharma, biotech, telecom. So financial services, banking and insurance is quite stable. Those are the more positive sectors. We are really refocusing everything on those sectors. You can find some individual companies in other sectors.
And although the pandemic is having its effect on sales, I believe that some costs will also be affected due to the pandemic. I guess travel expenses are close to zero, but is there anything else that you're able to cut in this environment?
Sure. Expenses. we have normally quite a lot of subcontractors. We have 900 employees, but we have many hundreds of subcontractors. So obviously now we are using our own employees more and sub less. You can say quite. Obviously, it's a variable compensation to our people, and variable compensation. So, for sure, revenues are being challenged, but there are many opportunities for us to save money without touching the long-term value of the company.
Looking at recent news, we see some positive signs from Asia, etc. Can you say anything about the development in Asia now, as we are some weeks into Q2? Has the market started to come back to more normal levels than prior to the crisis?
I mean, it's a very clear cycle caused by the corona. First, companies, into panic and they stopped doing anything. And then after some time, they say, well, we have to do something, and they start to go virtual and digital to keep their business running. And once a geographic area, starts to open up again, the lockdown ends gradually. Then companies back to the office, they start to discuss with us more again. And we can see this pattern in all geographical areas around, depending on where you are in the corona crisis. And business opportunities with the client. So yes, some markets opening up, see that in several places around the world.
Okay, thank you, Henrik. BTS has historically proven itself to be active within M&A. How do you think the pandemic is affecting your M&A agenda? Is it opening up for more companies on the agenda, or are prices changing in any sense? What can you say about that? Yeah, I mean, it's clear that if other competitors are doing, I see many competitors out there who have not been able to move to digital, virtual, who are suffering more. Some of our competitors are dismissing their people, cutting their salaries, and so on. So at the end of the day, I think there will be more companies for sale. Will the prices go down? I think with time, yes. Typically, a bit of a lag before that happens. I think a good timing to look deeper in terms of actually making the deals is later in this year, or possibly even early next year. Okay, that's very helpful. And I'd like to stay on the M&A topic as a final question. Because I think it would be very helpful to explain for you, to us, around your M&A process. What are the companies generating except for a pile of money from being acquired by BTS? Well, we look for companies because we have many big clients, and we look for companies that can provide new products to us, or we look for can provide a new market for us, and then we integrate them. And if they bring a new product, we can sell that to all our customers, and we give them growth. And if we come into a new market, we serve brand. So all the units that come in, they grow, and this is why we a down payment plus an earn-out, also to make sure that integration really works out well. And there again, we have a very good track record in integrating these companies. And I want to, really, but everything else we do now is we're making sure to deliver, a safe 2020, even though it's a much tougher market. But we are very focused on how
become strong. So 2021, 22, 23, 24, bigger profits than we have historically. So recessions are tough times of challenges, but those are the times when you build the position so you can grow many years after the recession.
Sounds like the future is very bright for you. Unfortunately, we have now run out of time, but I'd like to send a big thank you for today's presentation, Henrik, and please stay safe.
Thanks indeed, and thanks everyone for listening in. To everyone, stay safe and remain optimistic about the future. The normal will come back with some new habits.